G. So we are doing AS accounting, and the topic we are doing is incomplete records in AS accounting. And the question we are going to solve has come in October, November 23, 22. October, November 23, 22 is the variant. And this question is basically belongs to company accounts. So that is company with incomplete records. That is basically the question. And it has come as a first question in the paper. So P Limited sells electronic goods online. 8% debentures are given. That is 36,000 on 31st July 2023. So for Iman, I'm telling you that debenture is basically a non-current liability. Till this point, you can assume this, that debenture is a non-current liability, like companies used to take loan from individuals and they issue debentures in return to those individuals as a security, right? It is a written acknowledgement of a debt that company is supposed to pay back that amount of 36,000 along with interest at 8% per annum, which is going to be paid annually. When till the time the debenture is not going to be redeemed, till the time the debenture is not going to be repaid. The debenture is a non-current liability. And if you see that at 1st August 2022, which is the start of the year, there was no debentures. But at 31st July 2023, we have a debenture of 36,000. It means that the debentures are issued or the loan has been taken from the individual to whom we have issued the debentures is happened in the current year. That is 36,000. Inventory opening 36,800, closing for 43,190. Other payables, admin expenses are given opening. Other receivables, admin expenses are giving opening and closing both. Mean these are prepaid. This is accrued. Other receivable distribution cost is 1,490 at the end. And trade payables, opening, closing are given in the question. Which thing is missing in the question? Which one of the opening and closing is not given in the question? Any item whose opening and closing normally used to be given in the question, but over here it is not there. Trade receivables. So it means that trade receivables, payables are given. So trade receivables are not given. It means that we are not going for a credit sale. So there will be no credit sale because there are no trade receivable at the start or at the end. So payments to credit suppliers are 122,050. Admin expenses and distribution costs are given. These are the expenses. Receipt from customers are 284,200. All goods are dispatched to customer immediately on receipt of payment. So whatever goods whatever amount we receive, we basically dispatch the goods to the customer at the time of receipt. It means you might consider that whatever amount we are receiving from the customers, that is going to be our total sales, because goods are dispatched to customers immediately on receipt of payment. So it means that we are basically selling almost for cash. Next, 8% debenture were issued on 1st April. So it means that the non-current liability, the loan of 8% debenture, has been taken on 1st April. And our financial year charge for taxation was 10,700. That is also an expense. And our financial year is going to end at 31st July 2023. So April till July. April, May, June, July. It means we have to pay interest on 8% debenture for 4 months. So what is the amount of debenture? If you just look at the question, that is say 36,000. 36,000 multiplied by 8% into 4/12. That is going to be your finance cost or interest expense, whatever it is. Charge for taxation was estimated to be 10,700. Second point, which we have discussed already in the previous questions also, October, November 23, 22, I just want to see the requirement. Prepare a statement of profit and loss. Use the space provided to show your workings regarding cost of sale, admin expenses, and distribution cost. And that's it. So this is how the whole question has been prepared. So let's... Inventory at 31st July included damaged items that has cost 3,600. One half of these items will be scrapped and have no value. The remaining items will be sold for 900 after repairing cost $420. So inventory included damaged items which had cost 3,600. So what is the closing inventory value of closing inventory? 43,190. Okay. So let's do that part first. 43,190 is the closing inventory. In that particular inventory, 3,600 of the inventory is included and one half of these items will be scrapped and have no value. It means the 1800 of the inventory has been abolished, damaged. It has no value, so it has become zero. It is a dead loss. The remaining 1800, so I can write here 43190 minus 1800 because that has been lost, completely lost. So I can subtract 1800 from 43190 to make myself understand that 1800 in the inventory has been lost or it has gone into waste. The remaining 1800, the cost of the inventory, which is 1800, that can be sold for 900 after repairing cost of 400. So what I will do, I have to calculate NRV, market value, which is 900 minus cost to sell, which is the repairing cost, that is 420. So what is the amount? Sorry, 480. So instead of 1800, that inventory should have been written with an amount of 480 rather than 1800. Why, sir? Because the remaining 1800 of the inventory, of the damaged inventory, now can be sold for 900 after repairing cost of 420. So whatever I am receiving from that inventory is 480, which is the NRV, and the cost is 1800. So I have to record inventory or NRV, whichever is less. I have to write the lesser amount. So what I'm going to do, minus 1800 is completely has become zero for us. That is why I have subtracted minus 1800. Again, I will subtract minus 1800. The remaining damage inventory I will subtract, but I will add how much? 480. Because the remaining 1800 of the damage inventory, its value is now 480. We should have recorded 480 rather than 1800. I will subtract. Yes. So the actual value of the inventory, the correct value of the inventory is 40070 is the inventory value which you are supposed to write over here. Okay. So this is the inventory valuation point which has come in the question, and usually the examiner used to ask us the same question is coming rapidly in the paper regarding the inventory valuation. Next thing, we have to prepare the PLCA, purchase ledger control account, to find credit purchases. So let's do that. Here I will write brought down. Here comes the carried down. Here I will write payment to trade payable. And here I am going to write the credit purchases. So let's see that what is the brought down of trade payables. Purchase return, sales return is not given. So brought down of trade payables is 29610 and carried down is 25250. So I will write here 29610 and carried down is 25250. Okay. Payment to trade payable to credit suppliers is 122050. So I will write here payment to trade payable 122050. No purchase return, no discount receipt has been given, so I can find the credit purchases. What is the amount of credit purchases? If you can calculate for me. 117690 is the amount of credit purchases, right? So in company, the statement of profit and loss or the income statement has a certain format which we have to follow. So I will solve the question in that particular format. So you have to find cost of sales first. Sorry. Because in the question, it has been written that you have to find the resultant amount of cost of sale, the correct value, the answer of the cost of sale. So cost of sale is equal to opening inventory plus purchases minus closing inventory. If you want to do it in the question, you can do that. There's not that much issue in that. So inventory opening is now 36,800. So I will write here 36,800 plus purchases. We have calculated 117,690, and the closing inventory is 43190. So what is the amount of cost of sales? Triple 400 is going to be the cost of sales. Now I can prepare the statement of profit and loss. And when we used to prepare the statement of profit and loss for the company, it has a different format. Closing inventory, yes, you will have to write the correct amount. The amount which we have been gone for the correction. So we have to take that amount, and that is going to be 40070. So how much it is? 114420, right? So because we have already subtracted 1800, which is damaged, and the remaining 1800 of damaged inventory is basically, it has a NRV of 480. So the correct value of closing inventory is 40070, which should have been written. 114420 is the value of the inventory. So now I will start from the revenue. इसको जरा मिटा देते हैं. Now you can see that revenue is not given. Even the trade receivables at the start and trade receipt at the end is also not given. So it means that whatever the receipts we are getting from customers, that is going to be our total sales, means that all the sales are for cash. So the amount from receipt from customers is going to be 284200. So I will write here 284200 less cost of sales. The cost of sales we have calculated, that is 114420. I will subtract sales, cost of sale from sales. I will find the gross profit. What is the amount? You will write the full, full amount of the labeling, not only the word GP. 169780. Now I will subtract less operating expenses. There are two expenses which comes in operating expenses in basically company: distribution cost and admin cost. This is the way we used to prepare the income statement or statement of profit and loss regarding the company accounts. So distribution cost and admin cost. These are the expenses. Distribution cost means selling expense, and admin cost means office expenses. You can think like that also. So distribution cost is given, that is 51730, but we have distribution cost of other receivables, which is 1490. It means that this distribution cost is basically what it is. It is how we are going to treat that? Yes, prepaid distribution cost. This is basically, so 1490 needs to be subtracted. It is an expense. Expense cannot be received. So if other receivables mean that it has been received earlier, before the time, that is a prepaid distribution cost 1490. So I will write 51730. I will write here 51730 minus 1490. So what is the amount? Let me see. 1490. Yes. What is the answer? 50240. Okay. Now I will have to calculate admin expenses. So let's prepare the admin expense account. I can prepare the admin expense account because that will help me to understand the concept more easily. Sir, why you didn't prepare the distribution expense? I can prepare that also, but there is only prepaid at the end. I have subtracted. That was not that difficult. That's why. So admin expenses, if we talk about the admin expenses, other payable admin expenses at the start are going to be 960. So there comes accrued brought down, payable brought down, that is 960. Accrued carried down is not given in the question, or you can say it is not available. Now here prepaid or other receivable brought down, admin expenses is 1820, and prepaid carried down, that is also written. I will write here. That is going to be how much? 160. Now the bank figure, the admin expenses paid are going to be 66920. 66920. And here I will going to find the profit and loss account figure. So I will go for the total of the debit side. I will subtract the credit side to find the profit and loss account figure. Six seven 620. So profit and loss figure is 67620 is the profit and loss statement figure for admin expenses. So I will write here 67620. I will add the expenses and I will get the total operating expenses for the year. You need to calculate that. 117860. So 887860 is going to be the total of the operating expenses. If I will subtract operating expenses from gross profit, the answer is known as profit from operations. In company, we used to go for such kind of a pattern format. We write profit from operation 51920 is going to be the profit from operation, which I have calculated for you. Next, from profit from operation, we used to less finance cost. Finance cost means that is going to be the interest cost, right? That is going to be the interest cost. Interest cost we need to calculate because debenture is a non-current liability, 36,000 into 8%. We have taken the debenture on April. So April, May, June, July. So 36,000 into 8% into 4/12. How much it will come? Yes, what is the amount? $960. You have calculated already. Less finance cost, $960. I will write here. Now I will subtract the finance cost from 51920. I will get the amount that is known as profit before tax. Earning before tax, you can call it as. What is the amount? 51920, 50960. And what I will going to do, less taxation. Because company used to pay tax also on the income of the company. It is basically applied on the income of the company. So it comes in the income statement and taxation is given that we are going to, taxation is basically 10,700, which we have to pay. It is also an expense, but it is always subtracted at the end of the statement of profit and loss in the company accounts or in the company statement of profit and loss. So this is known as profit after tax. So what is the amount? 40260. So that is my profit after tax. So overall, generally the question was easy, but only the format which we have to adopt is little new for us regarding company. That in company we have to take only two expenses, distribution cost and admin cost, and we have to adjust the prepaid and accrued expenses accordingly. And after subtracting the expenses, we have profit from operation. Then we subtract finance cost to get profit before tax, and then we subtract taxation. If given in the question, we'll get profit after tax. This is how we are done with this question. Distribution cost includes all selling costs like sales expenses, sales salaries, advertisement, right? So all carriage outward, all expenses which related to distribution or delivery, depreciation of delivery vehicle, depreciation of delivery van, delivery cost, these all comes in distribution cost. Admin expenses include office expenses, administrative salaries, right? Office salaries, bad debts comes in administration cost because the provision for doubtful debt also comes in administration cost because that is because of the weakness of the admin department that we are not able to cope up and we have resultant in bad debts. So administration was not good enough that they will be able to recover the amount from trade receiver. So this is how we are done with this. October, November 23, 22 was the question. It was quite easy, I believe. This is how we are done with that. If you have any problem, you can ask me.